All right, everybody, welcome back. Today, we're diving into a question that's on a lot of minds. Just how much Bitcoin is enough?
It's a question with a million answers, right?
Yeah. And we're going to try to break it down using financial expert Fred Krueger's model for Bitcoin allocation by age as a jumping off point.
Exactly. We'll examine it alongside current market trends and, what could go wrong.
Right.
Basically, arming you with the knowledge you need to make your own decisions.
Exactly. So Krueger's approach is all about getting in early, right? He suggests aiming for zero point 0.1 Bitcoin by 20.
Right.
Bump that up to a full Bitcoin by 35.
Yeah,
And if you're feeling really ambitious, shoot for 10 Bitcoin by 50.
that's a bold goal.
Yeah,
But his model really emphasizes how getting in early, even with a small amount, could potentially mean huge EE returns down the line, assuming Bitcoin follows his projected trajectory, of course.
yeah, like imagine being 20 years old right now, putting a little bit away in Bitcoin, and then bam, retirement is looking pretty sweet, right?
It's a tantalizing idea, no doubt.
Yeah,
It really captures the imagination, doesn't it?
yeah,
However, and this is a big however, this is all based on Bitcoin going up,
right.
which, as we know, nothing is guaranteed.
Nothing is guaranteed in life,
Especially with crypto.
especially with crypto. So this age-based approach, while interesting, how realistic is it for someone who's, well, maybe not in their 20s anymore?
That's the million-dollar question, isn't it? And it's where, we need to balance Kruger's optimism with a little bit of a reality check, because remember, this model, it's just one perspective.
Right.
It's about potential, not a promise. It doesn't factor in your personal financial situation, how much risk you're comfortable with, or even just the ever-changing nature of, well, everything with crypto, really.
So it's more like a starting point.
Exactly.
It's definitely something to think about, especially for those who believe in the long-term potential of Bitcoin. But it's not a one-size-fits-all.
All right, you can't just blindly follow it. You have to weigh the potential rewards against the very real risks involved.
And speaking of those risks and rewards, so if it's not just some, magic internet money fairy waving her wand, what actually drives Bitcoin's value? What should we be paying attention to?
Well, it's not magic, that's for sure. To really understand, we need to zoom out a bit, look at the whole playing field, not just Bitcoin in isolation. Market analyst Tom Lee, he offered some really interesting insights on this. For example, he highlights this connection between Bitcoin and, get this, the stock market.
Okay, yeah. I mean, I have noticed when the stock market takes a hit, Bitcoin seems to follow, like they're tied together somehow.
Exactly. And it makes sense when you think about it, right? When people are feeling good about the stock market, they're more likely to be open to riskier investments. It's like a rising tide lifts all boats kind of thing.
So a strong stock market could actually boost Bitcoin. That's interesting.
It's one of many factors, yeah. Another one is the Federal Reserve. Believe it or not, those interest rate decisions, they can actually make Bitcoin more or less appealing to investors.
Really? Now you've lost me. I thought interest rates were just something, my parents worried about.
Right. Well, when interest rates are low, keeping your money in a regular savings account doesn't generate a lot of return. It's like, it's safe, but it's not exactly growing very fast.
Okay, so people start looking for better returns, something a little more exciting.
Exactly. And that's where Bitcoin, with its potential for higher returns, starts to look really attractive. It's all about weighing that risk versus the potential reward.
Right, right. Okay, so we've got the stock market, interest rates. What else is in the mix here?
Well, we also have to consider global factors. Lee specifically mentions China's stimulus efforts as a potential factor impacting Bitcoin's price.
China. What does China have to do with Bitcoin?
Well, China's a huge player in the global economy, right? When they make a move, everyone feels it.
Okay, that makes sense. So when China's trying to boost its own growth, how does that impact Bitcoin?
Think of it this way. A growing Chinese economy usually means increased global trade and investment. And as that money starts flowing more freely, some of it's going to find its way to Bitcoin.
So it's like a domino effect. One thing leads to another, and eventually Bitcoin is impacted.
You got it. The takeaway here is Bitcoin doesn't exist in a bubble. It's part of this big, complicated system. And to really understand it, we've got to look at what's happening in the wider world, not just the crypto market.
This is making me realize there's a lot more to Bitcoin than just, the price going up or down.
Absolutely. And that's why it's so important to be informed. When you're thinking about investing in Bitcoin, you got to look at the big picture.
Okay, so we've talked about investing directly in Bitcoin, but what about those other approaches? The ones where you're not actually buying Bitcoin itself.
You're talking about proxy investments, right? And for that, I think it's helpful to look at a real-world example, and MicroStrategy is a perfect case study for this.
MicroStrategy, yeah. They're the ones who basically went all in on Bitcoin, right? Like, bet the whole farm on it.
Yeah, that's one way to put it. They've made Bitcoin a huge part of their strategy.
And what's interesting is their stock, it seems to go up even when Bitcoin dips a little. It's like they found a way to ride the wave without, getting wet.
It's a good example of what's called a proxy investment. It's a way to kind of get in on the action without actually owning the thing itself.
Okay, so instead of buying Bitcoin directly, people are buying MicroStrategy stock as a way to bet on Bitcoin going up.
Exactly. They're hoping that as Bitcoin's value rises, so too will MicroStrategies and therefore their stock price. And for some investors, that feels safer, maybe a little less volatile than dealing with crypto directly.
But there's got to be a downside, right?
Well, the thing is, proxy investments, they don't always perfectly mirror the thing they're tracking. You're not, directly tied to Bitcoin's performance.
So MicroStrategy could go down even if Bitcoin is doing well.
Exactly. Their own business decisions, even just how the market perceives them, that can all affect their stock price separately from Bitcoin. And in fact, there are signs that might be happening already.
Really?
Yeah, remember Fred Krueger, our Bitcoin allocation guru from earlier?
Yeah.
Well, he's pointed out that MicroStrategy stock, it's currently trading at a premium compared to how much Bitcoin they actually own, meaning it might be overvalued.
Overvalued meaning?
Meaning investors are paying more for the stock than their underlying assets, those Bitcoins, are actually worth at this moment.
Huh. So it's kind of like they're paying extra for the potential of Bitcoin, not necessarily the reality of it.
You got it. Which isn't necessarily a bad thing, but it just highlights, again, that you got to do your homework, right? Even with something like a company stock, you got to understand what's really driving its price, especially when it's tied to something as unpredictable as Bitcoin.
So whether you're diving headfirst into Bitcoin or taking the scenic route with something like MicroStrategy, knowledge is power.
100%. And speaking of things that can impact the future of Bitcoin, we got to talk about regulation. That whole crypto.com versus the SEC situation, it's a big deal.
Yeah, it feels like the whole crypto world is kind of holding its breath to see what happens there.
Rightfully so, because this case, it's about more than just crypto.com. It's about how much control the SEC can exert over the whole crypto industry here in the U.S.
And what could that mean for Bitcoin specifically?
Well, if the SEC wins, it could definitely slow things down, at least in the U.S. Stricter rules could make it harder for people to buy, sell, use Bitcoin, the whole 9 yards.
So this isn't just some legal drama playing out in the background. It could have real-world consequences for all of us who are interested in Bitcoin.
Absolutely. This case could really set the tone for how Bitcoin is regulated or not regulated moving forward, and that's going to impact its growth and adoption. It's a lot to think about.
It is. We've covered a lot of ground today. We've talked about how much Bitcoin to own, what impacts its price, even how companies are getting involved. It's been quite a ride.
It has, and hopefully, we've given our listeners something to chew on, some new insights to help them navigate this crazy world of Bitcoin.
Exactly. Because ultimately, it's about making informed decisions.
Yeah.
Right. It's about understanding the potential of Bitcoin, but also the risks.
Right. And beyond just the numbers, it's interesting to think about what Bitcoin represents. Is it just a fad? Or is it the future of finance? I don't think there's a simple answer, but it's a question worth asking.
Definitely something to ponder. Well, on that note, thanks for joining us for this deep dive into all things Bitcoin. Keep those brains buzzing, and we'll see you next time.